before when you talk about some of these comments about knowing where generals and the Ayatollah are, et cetera, et cetera.
Which blurs the line between defensive versus offensive involvement already, even before we talk about whether these particular bombs are going to be involved. So it's a great point.
And by the way, Russia is using Iranian drones to attack Ukraine. One wonder if Iran hopefully provides them with fewer drones.
This is the other
because
thing.
They need to keep them for themselves now.
Yes, and this is the other thing that investors need to understand here, which is that the mix of weapon systems is changing as well as more
involved. So it's a great point.
And by the way, Russia.
¿Cómo están? Buenos días, bienvenidos al directo y cierre de bolsa. Son 12:31. Bolsa cierra en 1 hora y media, básicamente. Estamos viendo las noticias sobre Irán y ahorita vamos a comenzar con qué es lo que pasó hoy.
And Morgan Brennan. I'm joking.
Who's that?
The housing sector is still showing some signs of weakness, but our next guest is betting on a turnaround. We have some names to watch in Market Navigator next.
Even a life that's rich with meaning can take an unexpected turn. And when life brings you change, we have over 100 years of navigating market up.
Vamos a ver, ha sido una sesión lenta, de cierta manera aburrida. Miren, vamos a checar los índices. Más actualizado esto. ¿Por qué no se actualiza? Dice que necesito una mejor compu, pero pronto llegará. Ya se trabó. Colapso. Vamos a buscar Tesla para ver cómo se está moviendo con una beta bastante alta. También ya se paró esto. Muy raro. Ok. Bien, ya sé. Esta sí se logró actualizar. Bien. Tesla la tenemos muy a la baja. Eso es relativamente malo. Tenemos los índices a la baja. Ninguno mayor a 1%, así que no hay nada de qué preocuparse. Hay liquidez lista para comprar Tesla, claro. Pero todavía no. Mientras tanto, tenemos acciones favoritas. Meta a la baja. Netflix a la baja. Todas estas a la baja. ¿Quiénes están subiendo? Es lo interesante. High-low. Vean. Volatilidad subiendo, $2.39. El corto de Tesla. El corto a MicroStrategy. Volatilidad subiendo. Genial. Vamos a checar. Vamos a checar eso. Tengo frío, pero me vendría mejor la gorra. A ver. Porque no sé por qué se están, ¿cómo se llama? Mis lentes se están empañando y me choca que se empañen. Bien, ¿se ve bien? Sí, se ve bien. Ok. Tenemos la volatilidad, bien, eso es excelente. Súper bien. 3.29, 3.42. Este ha dejado más ganancia por centavos de diferencia. El corto al Bitcoin. Vamos a checar también cómo va. Ahorita checo en qué precio se compró BT, porque se compró diferentes veces. Cada vez que el Bitcoin cae, se ha comprado BT para estar al tiro con eso. Vamos a poner esto por acá. Más audífonos así. Vamos a checar en lo que carga esa cosa. Charles Swap.
100 has just broken below 6,000 once again as oil is jumping. What does it mean for stocks at these levels? What should you be watching? Also, he has on his radar United Airlines and Applied Materials. We'll take a look. We'll be right back.
Miren, cayendo. Ninguno mayor a 1%, normal. Este se le conoce como un día normal en bolsa a la baja. Nada de qué preocuparse. Vamos a checar acá.
His picks, though, were a little bit eclectic. I mean, he likes Meritage, he likes Builder's First Source. What about you?
Yeah, so we're always looking for opportunities, of great companies that are at attractive valuations, regardless of what it is. And it's not necessarily just a builder story for us. We're looking at the entire housing ecosystem, so from materials to retail. And you could always look at an ETF like the iShares Home Construction ETF, but there's a handful of companies that keep hitting our screen. So these three are all off double digits this year. So Lennar is the first. It's the second largest home builder in the U.S. They reported earnings yesterday, and they hit revenue targets, but they missed on earnings, mostly due to some of the incentives they've been offering to move homes. But still, they're in a strong spot for any housing rebound. Their size gives them an edge over some smaller builders in certain markets. Main thing with Lennar, shares are down 16% this year. The stock trades at a forward PE of 10, and it's well below where it started the year at 17. So the next, you could look at Masco, and it might not be a household name, but their brands definitely are. So think Behr Paint, Delta Faucets, Kilz, like KILZ. About 85% of the business comes from the repair and remodel, which tends to bounce back before the broader housing market.
Yeah.
And as home sales pick up, people upgrade their kitchens and bathrooms, and paint and plumbing are usually the first things that they touch. So the stock's down 14% this year. They trade in line with their typical valuation and solid dividend name. And then lastly, Williams-Sonoma. So first thing you would do typically after buying a home, look at furniture, maybe some cookware, some small appliances.
Sure.
They own big names like Pottery Barn, West Elm, and their core namesake brand. But a big tailwind here is that more than half their sales are digital, which means some high margin scalable growth when home sales do pick up. Shares again down 16% this year, but the fundamentals are intact, and another very strong dividend payer.
All right. Thank you very much, Brian Powers. Matt Powers of the Powers Advisor Group. Thank you very much for that. Brian, I'll send these back over to you guys.
All right, thank you. All right, on deck. Why Morgan Stanley's Mike Wilson is feeling bullish about stocks.
Market Navigator is sponsored by Charles Schwab. Trade brilliantly.
We just signed the lease on our third shop. My assistant went to customink.com to get new uniforms with all the locations. He found great products, uploaded new art, and had boxes sent to all the shops. Custom Ink makes it so easy. Get started today at customink.com.
Life is always changing, and our Lovesac couch adapts to it all. Gathering around for game day one moment, reconfiguring for entertaining the next. And tomorrow, a new look entirely. Because Lovesac adapts to life, our life.
You founded your kayak company because you love the ocean, not spreadsheets. You need to hire.
I need Indeed.
Indeed.
¿Cuándo íbamos a ver a Tesla en 316? El evento del robotaxi se supone que es... Vamos a buscarlo. Robotaxi Event. Vamos aquí. ¿Cómo ver el evento del robotaxi? A ver qué sale. No, manches, esto es del 10 de octubre del 24, ¿no? Algo más actual, a ver. Yo recuerdo que va a ser esta semana, pero aquí fue el que leímos. Creo que lo leímos aquí. No recuerdo si fue en la apertura o en el cierre, pero a ver. El 12 de junio. Ajá, eso iba a ser el 12 de junio. 22 de junio. Ok. Entonces va a ser el domingo. ¿Sí será el domingo? A ver, vamos a checar. Ok. Ya iba a ver el calendario. 22, sí, va a ser el domingo. Entonces está la incertidumbre de comprar acciones el viernes 20. Comprar las acciones el viernes 20, si sale bien el evento, el lunes 23 subirían las acciones. Aunque también varias veces lo he dicho, Tesla, a mi parecer, está en el tema de compra el rumor, vende la noticia. Entonces, incluso ya hasta ese statu quo ya pasó para Tesla. Y como sabemos que ya pasó, pues porque se están corrigiendo las acciones. Entonces, a ver, listo. Ok. A ver, espérense, es que estoy viendo muchas cosas acá en... Ah, ok, a ver aquí. Listo. Ya terminamos acá. Ahora tengo que...
That's normal about human nature as it relates to investing and trading alike. It is that when humans feel uncomfortable, we sell. That's what we do. It puts us in a more comfortable
Hermoso.
scenario. We build cash.
Hermoso. Está subiendo la volatilidad de una manera maravillosa. Esto es lo que se hace. De hecho, no recuerdo si vieron el viernes, pero el viernes colocamos volatilidad porque sabíamos que el conflicto, bueno, yo sabía que ese conflicto iba para largo, y para largo son 5 días, claro, esta semana. Seguramente hoy al cierre o mañana anuncien algo, lo que sea. Con eso, lo último que se sabe es que Trump dijo que evacuaran Tirán o Tehran, es la capital de... ah, no sé si es la de Israel o la de Irán, creo que es la de Israel, porque Irán es el que tiene las bombas nucleares. Entonces, pues está por verse. Y eso fue la última actualización que dijeron, como de, ¿saben qué? No firmó ni incluso el acuerdo del G7. El G7 termina hoy, entonces él se fue ayer para regresar hoy es martes y martes en la madrugada a Estados Unidos, a su país. Entonces, eso es lo que tenemos ahorita. Vamos a agarrar así. Vamos a share. Ajá. Vamos a ponerle así. Y vamos a quitar esto. Ok. 7% por título comprado, justo. The watchlist tomorrow. Chéquense esto. Mañana, Jerome Powell va a hablar. Va a ser la Junta de la Reserva Federal sobre si suben o bajan las tasas. Obviamente, ahorita checamos FedWatch. La probabilidad es que se queden quietas. No van a hacer la gran cosa. Vamos a copiar esto. Vamos a pegarlo por acá. Listo. Bien. Listo. Vamos a checar acá.
For one, oh, there's the group. We'll talk more about it after this.
Crypto Watch is sponsored by Crypto.com. Crypto.
Estoy haciendo llamadas en frío a todos mis contactos como posibles clientes, como prospección de clientes, para dar sesiones informativas en relación a la bolsa, cómo funciona, cuál es la regulación, el papel de la Comisión Nacional, comisiones, spreads, todo eso, todo lo que se necesita. Todo con el objetivo de fomentar la educación financiera. Por supuesto, es gratis, dura 30 minutos. Se llevan el conocimiento, se llevan la experiencia de saber que hay un servicio allá afuera que los puede ayudar a ahorrar más rápido, a hacer dinero más rápido, con planes personalizados privados, una iniciativa privada para cada uno de ustedes. Quien le interese, pues adelante ya haremos el proceso. La apertura de la cuenta, la firma de contratos, todo eso, para pues comenzar a trabajar juntos, ¿va? En el ahorro y pues patrimonio de cada mexicano.
Retail sales numbers, when you look at them, they missed, right? And that's the big picture. I do want to comb through the numbers a little more closely, though, because there were some bright spots. However, the big picture was weaker, it missed, and it leads the question to what is the consumer going to do next? Joining me here for this discussion, Jacob Aiken, Phillips VP of Consumer and Retail Research at Melius Research, and Michael Green here on set with me, Chief Strategist at Simplify Asset Management. So thank you both for being with us. The ex-auto number, I mean, there were bright spots, and you saw furniture and food. I mean, some of those did okay, but the big picture was a miss and a little weaker. What does that tell you, Michael?
Well, I think there's two things that you would take away from it. First, there's a lot of debate that's been going on around the seasonal adjustment versus non-seasonal adjustment. May is always a pickup in activity. It's tied to the moving season, people buying and selling homes.
Right.
One of the areas that we saw clear activity was effectively the buy ahead. So a lot of furniture that is drop shipped or sent flat packed from places like China, which has become a significant supplier of furniture, those areas were ultimately buy ahead. I would suggest that a lot of that was actually people buying in anticipation of the tariffs going up, trying to get ahead of it. We'll get to see what this looks like going forward, but the very simple answer is this was a miss. I would actually argue that the areas of bright spots, we'll see those likely deteriorate, but if you're not going to buy a car and you're not going to buy a bunch of other stuff,
right,
you've got a little bit of discretionary income to buy other areas.
Yeah, I mean, the big picture is people are worried. I mean, there's definitely a cautionary tone. We've seen that in the sentiment prints, though there was some improvement. The big picture is people, they have a job, but there's still a certain worry because they don't know how much things are going to. Well, they've already seen, Jacob, prices higher, right? What did the retail sales print tell you now, and what do you think about the consumer in the next few months?
I mean, I largely agree with what he just said. There definitely seems to be a pull forward of some categories into March, and that seems to be reversing. But the core, like the control group numbers, are strong, with 40 bips up, and that's what feeds like GTP Now estimates and stuff. So that could be relevant for the market. In terms of pricing, I don't think that we would have seen all of the tariff-driven pricing flow through these numbers yet. That would still be in the months to come.
Tell me about some of these stores that you noted: Walmart, Costco, BJ's, K-Ski, Murphy USA. Tell me some of those names. Why are those important right now, Jacob?
Yeah, so I covered the staples retailers like what you just said, and a lot of these stores are performing really well. Walmart, Costco, BJ's, either the value-oriented stores or stores that have some niche. Like Costco has the membership, so they can offer lower prices. Same for BJ's. Walmart is best of both worlds. It's everyday low pricing, and it offers value through convenience through delivery. Then some of the C stores are doing well relatively, like Murphy's and Casey. Murphy's actually pre-released some numbers yesterday and very positive in terms of like fuel gallons. So the consumer is definitely shifting spending, but they seem to be willing to spend on value, whether that be through price or convenience.
And you know, Michael, you made some points about some of the headwinds, right? The gas prices, they had some relief if oil goes up. You have a list here: tariffs, loan payments, and credit. Tell me about the headwinds that consumers face.
Yeah, I mean, the key headwinds that consumers face at this point. One, we are clearly seeing a slowing or deterioration of the labor market. Those jobs, they're still out there, but people are worried about getting them. New job seekers are getting lower wages than job stayers for the first time in an extended period. That's suggesting that the hiring market is basically, if we can find the perfect candidate, we'll hire them, but we're not actually really looking, right? And I think people sense that. The other area that I think people are ignoring or not paying enough attention to is that ultimately, regardless of who pays it, whether it's largely absorbed by the producer or whether it's absorbed by the retailer or whether it's absorbed by the consumer, it's simply a tax, right? It is a tax on consumption in the United States. We should expect that to lead to lower numbers. And then the other area that is growing in terms of concern for me in particular is areas around things like student loan repayments, which
No sé si vieron Succession, pero se me hace como a Tom Wansgans, el novio de Shiv, el prometido de Shiv. Oigan, si la volatilidad está subiendo, vamos a checar cómo va el corto del Bitcoin. Se está cansando, pues acelerando aquí, miren. Ok, voy a checar el precio. A ver.
You're stepping even further when you start talking about things like the reporting of buy now, pay later to credit ratings. Right. That, of course, is suddenly causing impaired credit ratings for people, which means they can't access that incremental credit going forward. Student loans having a similar impact, et cetera. So these are all areas that represent headwinds before we even start thinking about the traditional, indicators of a recession, which, as you pointed out, oil.
Ya lo encontré. El 3 de junio se compraron 24 títulos de BT, el corto del Bitcoin, a 20.60. Entonces, vean BT, 20.29, entonces faltan 35 centavos para llegar al precio de compra. Entonces va a tardar otra bajada de Bitcoin y ya entonces tardaría, porque entonces aquí tenemos el Bitcoin en 104, pero ya se está recuperando, y tenemos el Ethereum también mostrando signos de recuperación. Entonces solo esperemos, pero también si lo vemos así, tenemos un piso aquí más o menos, y ya lo atraveso. Pero bueno, porque de aquí son 474, son $400. Entonces son... madres. Son como 6,000 pesos. Si llegara de aquí, 6,000 pesos seguro de ganancia.
Also, like introducing newer private label items to not necessarily compete, but provide another value option for their consumers. Like Target has been pushing like new everyday low cost items. Walmart has consistently done private label and has gotten better and better as they've expanded the assortment. It really goes across the board, and consumers are really picking up on it.
Yeah, what's your favorite name? Do you have like a major buy or a strong buy on any one name quickly?
So right now I do really like Walmart. There's a lot to like about it. They're taking share from discount retailers.
Okay. Jacob, thank you. Jacob Aiken-Phillips and Michael Green, thank you both so much. Wonderful to see you both. Really appreciate it. I'm Nicole Petalides. Thanks for being with us here on Schwab Network. This is the Watch List. I'll see you tomorrow. Keep it right here. Market on Close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power.
La realidad es que no hay mucho hoy, o sea, simplemente la bolsa está a la baja, se shortea en esos casos y pues ya, es todo. Se vigila la posición como en este caso y ya, así que no es como que la gran cosa. Tengo que checar. Otra vez empañado mis lentes, me choco. Tengo que checar cómo están las tablas de depósitos, porque hay clientes que, bueno, de hecho todos hacen sus aportaciones, así quincenales, mensuales. Entonces yo lo que tengo que hacer es, ok, si en enero tenías, no sé, 15,000, 25,000 pesos, en enero, ahorita es más, mucho más, son como 35, 40, por ejemplo, un vasto ejemplo. De eso, sí se refleja, sí se refleja. De eso, ¿cuál fue el rendimiento en ese mes? Es decir, qué activos estaban, cuáles fueron las ventas del periodo, todo eso. Entonces tengo que hacer un control para saber qué onda. Mientras tanto, a ver, control. Ok. Vamos para acá. Ok. Ok, ok. Viendo la tele de Charles Schwab. Miren ya, se terminó la descarga. Y ya es la 1, ya casi cierro la bolsa. Es un día muy relajado, muy relajado, no ha habido mucho. A ver.
The NASDAQ down almost 1 full percent, 0.9% at 21,739.68. The Dow, similar story here, down 0.75% at 42,197.54. And the Russell, right in that same range, trading down 0.85% at 21,0614. As we take a look at some of our other products here, a little more green on the board today. The dollar having a better day than usual, up almost 0.9% at 98.39. Gold down about 0.5% at 3401.50. Crude oil trading at 73.55, up 4.7% on the day. And Bitcoin now down at 104.615, so lower than we've seen, trading down almost 4% on the day. Now I'd like to bring in Jenny Horn, our markets correspondent here at Schwab Network. Let's recap some of our top stock stories. We've had a lot to talk about today. What's the first one you want to talk about?
We'll start off with, okay, I do think that one of the more interesting stories of the session has been solar. I know that was probably not maybe the most exciting to everyone, but because of the monstrous moves we were seeing today in some of these solar stocks. And I mean, like, consistently very downbeat. I do think that it is right now to be expected to see some degree of right now revisions with Donald Trump, of course, being president. This was being read already, I think, hugely priced in, as we did see during the course of the election. These names trended lower, but more downside today after we saw the Senate Republicans propose to fully phase out tax credits for wind and solar energy by 2028. And of course, this new proposed tax and spending bill. Names are down, I mean, like hugely. Some run down as much as 40% on the session today, but consistent weakness across the board as tax breaks for solar and wind would start to be phased out by at least 2026. With investors receiving about 60% of value of that credit. By 2027, it would be about 20% of that value received. By 2028, it would be completely removed. Now, the latest draft does seem to really slash any hopes that we would see the Senate meaningfully water down the bill. But what is interesting, and what I do want to note, is that tax credits being phased out for other energy sources was not consistent. We saw other electricity forms like nuclear, hydropower, geothermal not being phased out until 2036. The reasoning behind this, I can't really necessarily find why, but the proposed legislation would at least be, of course, paring back the legislation we saw under former President Joe Biden back in 2022, the Inflation Reduction Act. So I saw some.
Tómala, van a cortar el impuesto al crédito solar. O sea, van a dejar de estarlas apoyando. No manches, Enphase Energy, a ver. O sea, y recuerdan que ayer, les dije que el viernes se habían vendido las acciones. O sea, porque ya habían alcanzado un precio pues, bastante considerable, o sea, de 37 a 45, pues nada mal, ¿no? Pero vean, $35 otra vez. O sea, esto se llama riesgo sistémico. Una política, una decisión política que afecta a todo un sector. Entonces, inclusive vamos a checar, si no mal recuerdo, tenía las de Energy, aquí están. Vamos a checar. Enphase. Y eso y tengo que agregar a las otras. Pero Enphase, o sea, Enphase es una de mis favoritas por toda la historia que hay. Vean, o sea, 40, no. O sea, es una ganga. A ver. $34 son 90, 110. No manches, o sea, una mega ganga en Face Energy. Y hablando de mega gangas, claro, este es el inicio. O sea, no estaría mal volver a entrar en Face Energy. O sea, el señor mercado nos las vuelve a traer baratas, una maravilla, otra vez. Porque así pasa, o sea, muchas acciones las van abaratando con riesgo sistémico o riesgo financiero. Entonces, la verdad es que está bastante bien. 7%. Señor Mercado, gracias. Aquí es en donde agradecemos por el señor Mercado.
Do you think that it's been seen as nuclear has already been read as more of a friend to the Trump administration? I think we'll see more of a build out there if I were to make any prediction just based on the administration's commentary so far.
All right, I want to move us now to another story. As I pulled up Verve Therapeutics really quickly, they were up quite a bit on the day, up a lot more now. They're up almost 82% on the day because of this new deal that they announced with Eli Lilly. Catch us up on what's happening here. I mean, this is a huge move for them. Eli Lilly, however, down almost 2%.
Yeah, Eli Lilly, being, of course, the somewhat parent company of the two, is naturally seeing some pressure today, although actually pressure that's let up a little bit here after we did see they're buying the gene editing startup known as Verve Therapeutics for about $1.3 billion. Part of the agreement, though, Eli Lilly will be acquiring all shares outstanding for Verve for around $10.50 in cash, or excuse me, each, or about $1 billion up front. And another $3 a share, or roughly $300 million, will be contingent on the fact that Verve has to achieve certain clinical milestones. Why this is so interesting, though, is because Verve has been on the leading edge of a lot of these clinical stage developments regarding gene medicines for cardiovascular disease, as, of course, the #1 killer for most male adults here in the United States. So that would only actually have to be administered once a lifetime. And
Chéquense, Verve Therapeutics es una empresa que hace estudios genéticos. Entonces la van a adquirir Eli Lilly, pero Eli Lilly, vamos a checarlo, había colapsado recientemente. Porque aquí, mira, vamos a ponerlo a días. Recientemente habían reportado aquí está, su earnings report, reporte de ganancias, y habían declarado 12.73 billones de dólares. Nada mal. El tema es que disminuyeron sus probabilidades de ingresos a futuro y vean esto, o sea, señor mercado llega y las castiga. Estaban en $900, llegaron hasta 709. No, pero espérense. Esto fue en mayo, porque en abril, a ver, vamos a ubicarnos. En abril esto fue lo de Trump. Chido, se recuperaron, presentaron ingresos y bailó. De un día para otro fueron. Después llegaron a 708, nada mal, y ahorita están en 792. La verdad es que no lo vi, o sea, no, una sola persona luego no puede abarcar todo el mercado. Pero si los hubiera visto en este precio, los hubiera comprado. Tan solo con esta, o sea, comprar en 730 y vender en 780, 790 no está nada mal. Pero no la vi. Entonces digo, bueno, son oportunidades que se van. Con todo lo que estoy haciendo de la gestión y todo eso. Entonces, pues nada mal. Ahí va, miren. Ahora si lo vemos a horas, 827, miren. Después de su caída fuertísima, 827. Nada mal. Pero bueno.
Players out there, one being Meta Platforms. But I've always thought that Reddit does a great job carving out its own niche, where they have not updated their platform. And I'm a Reddit user, so this is no disrespect to the platform of Reddit, but they have not updated that platform in a true sense, I feel like, in 20 years. And that's why you love it. I mean, because it's true to me, like the tried and true, like just comments. It's like a platform for the people. It doesn't yet feel like a platform that's solely sought to monetize the parent company. But I guess with everything, there is still ad dollars to be had. And now that this name is public, you have to think about it a little bit differently here. So this is definitely at least helping some of that enthusiasm. I mean, AI-backed marketing tools, anytime you can throw AI into the mix, it's seemingly a recipe for some stock success.
It generally is. Jenny, thank you for catching us up. All those stories, lots to cover today.
Yes.
Thank you. We appreciate your insight. And now I want to shift gears here to the macro side, discuss one of the big stories of the week, and that's, of course, the Fed. So joining me now is Frank McKiernan. He's the co-founder of Third View Private Wealth. Frank, thanks for being with us this afternoon.
Thanks for having me, Marley.
I'm glad to. Now, Fed meeting is underway. We aren't expecting any rate movement tomorrow, but what will you be listening most closely for from Jerome Powell?
I'm going to be listening to see if anything's changed from the last statement. In the last statement, they took up their price expectations for the balance of this year, and they took down their growth estimates. So I'm going to see if anything's changed there. But as far as the hard data goes, we haven't seen any material impact yet. If you're looking at non-farm payrolls, the net revision number for the last 3 months has been 135, which is consistent with a strong economy. And then CPI, which is obviously the focus for the Fed, or core CPI, we had a lesser than expected number last week, and that marks the 4th month in a row that we've seen a miss on the core CPI print, which is obviously going to be a big focus for the Fed.
And of course, I'm sure a big focus also, so many cross currents from geopolitical events that we're dealing with now, of course, now in the 5th day of this Israel and Iran crisis to add to what we were already dealing with. How much do you think that these issues are going to inform any commentary or the dot plot itself?
I don't think it will. A lot of these geopolitical incidents, they happen. They don't certainly work that into their policy narrative. So I think it just re-emphasizes the case that they're going to be more data dependent and very patient as they approach the back half of this year.
And Frank, how many rate cuts are you anticipating that we're going to see this year?
I think we'll get 1. I know the market's pricing in 2 for the back half of this year. I just think that growth is stronger than I think most expect. There's some positive tailwinds in the market, whether you look at positive earnings revisions breadth, or you look at valuations, positioning. I think there's a lot of soft data there, leading indicators that suggest that economic growth is going to be pretty good for the back half of this year. So barring any change in sort of what's happening today with geopolitical narratives, that obviously can shift pretty quickly, as we know. But I think 1 cut is probably fair.
So retail sales data came in this morning. I'm sure you saw it. Consumers a little bit nervous about what lies ahead, clearly weaker than we expected. Do you think that weaker report will lead to some more dovish language or any acknowledgement that we could see some cooling in the economy? Or do you think we'll continue on this very neutral course that we've seen thus far?
Yeah, I think it's a Goldilocks market, Marley. I do. I don't think one print is necessarily a trend in the market. I'm watching a lot of leading indicators. Think about, we had, like I said, CPI last week. Consumer sentiment surveys are actually bearish, but I look at that as a contrarian bullish view looking forward. So, PMI is another one that's below 50. Historically, when that's below 50, that's an early cycle indicator, and that's inflecting higher. So that's why I think that growth in the second half of this year is probably going to be pretty good.
All right, I have questions about sentiment is bearish, obviously, but you see that as being bullish. Explain why.
So if you look at, look at positioning institutional. Hedge funds are net sellers. CTAs, which are commodity trading advisor firms, are all neutral on equities. If you look at short interest in the S&P 500 today, it's at 5-year highs going back to COVID. Short interest, meaning people short the S&P 500. That is a contrarian bullish signal. There's never been a top in the market where that's been the case. So that gives me a lot of confidence knowing that this market is probably going to melt higher. And at valuations at 22 times, we've round tripped since April where we were after Liberation Day. But I firmly believe that at 22 times with rates at 4 to 4.5%, this is a valuation that can be supported, particularly with the Fed going into an easing cycle either later this year or early next.
So with your bullish stance, what do you think the biggest risk to the dual mandate of the Fed is between inflation and employment? Is it stagflation?
I do. I'd agree. Stagflation for the Fed is definitely a major risk. As far as the markets go, I think higher interest rates is definitely the biggest risk to the market today. If you saw after Liberation Day, the 10-year went down to 3.8%, kind of as flight to quality. But then in the subsequent 3 days, it had gone up to 4.6%, almost 4.7%, and that's when that tariff pause came. So I think that 4.75 to 5% is kind of the danger zone for the Treasury. Secretary of Treasury Scott Bessent's been very vocal about keeping interest rates, longer-term interest rates, lower. So I think that's kind of the market warning sign. And then obviously, if you get higher prices and lower growth on the economy side, that's going to present obviously the ultimate challenge for the Fed at this point.
And we haven't seen the full impact of these tariffs and what they're potentially going to do to inflation. I read all the analyst notes. Do you think that the reinflationary fears, are they overblown, or are we going to start seeing that as new prints come out each month?
Yeah, listen, there's a lot to unpack, right? There's been a lot of speculation on what tariffs are, what they're not. You have to remember that 70% of the U.S. economy is services economy. A lot of these tariffs are going to be on goods. Which goods and which sectors, I think it changes by the day. I think I read this morning that the effective tariff rate is now at 14%, which is a long shot from where we started. So I think it's too premature to say that inflation is going to go up by 0.5 point, because in 2018 during his first term, when this kind of rolled out that was the case, I think it added a 0.5% to CPI. I think it's just too early to tell, and it's really you can't even underwrite it because there's not enough material information to base your model off of. So Unfortunately, it's one of those kind of wait and see moments. And I think that's what corporate America is where they're at. I think management teams and boardrooms, they're all kind of saying the same thing, that no one's, people are going to withhold CapEx because they don't know what the next week looks like or month looks like or year looks like at this point.
Yeah, unfortunately, we have no historical context to draw from in this current scenario. So I guess my final question for you is, what are your growth expectations for the rest of the year?
For the market or for the Fed?
For the market.
For the market, yeah, I think we're going to finish 10 to 15%. Like I said, the positive earnings breadth is a very strong tailwind for the market. You have that combined with a weaker dollar, which is going to support multinationals come this earnings season. So I think we close the year anywhere between 6,500 and 7,000 on the S&P.
All right. Well, thank you so much. That's Frank McKiernan from Third View Private Wealth. We appreciate your time this afternoon. Now, coming up, we'll dive more into the macro side of the market, and we'll look at the trends in the bond market and how tariffs and the yen carry trade are affecting volatility. Market on Close. We'll be right back.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Ya terminó esa llamada. Ahora, ¿en qué estábamos?
Hey, Dad. I have a question for
Estaba
you.
hablando de lo de la Reserva Federal y que los índices y que se va a cambiar la tasa de interés. Ah, miren, chéquense.
Be as quickly resolved as some may think, and so I'm not saying it's like the oil shock that we saw in the 70s, but when you combine what were lower oil prices, now higher oil prices, with tariffs in the near term, let's call it 3 to 6 months, you see sticky inflation, which forces the Fed to hold, which exacerbates the slowdown in growth. So I think I see it the same way as Megan does.
If that all were to play out in that way, it would seem as if, longer-term Treasury yields might not, have a whole lot of ability to stay elevated. Would you think that's the case, Peter?
Yeah, I think it's the sort of timing of it is that the Fed is stuck for a bit. Longer yields have stayed sticky for a bunch of reasons. Let's not forget that the tariffs created a deposit flight from U.S. banking institutions, and on the other side of the balance sheet, from the deposit liability or Treasury assets, and oftentimes bank will sell those Treasuries and longer dated Treasuries in some cases to fund the deposit withdrawals. And so I think we've had an unusually sticky 10-year relative to really what has been slowly slowing growth. And I don't expect that to last. And at the end of the day, let's call it into the end of the year, I would expect 10-year Treasury yields to be lower as well.
Well, they are today, just a bit under 4.4% on the 10-year. We're getting that Treasury bid that we didn't get on Friday with some of this headlines. Stephanie, Peter, Megan, thank you so much. Appreciate the time today. Let's get to Steve Kovac for a look at the biggest names moving into the close. Hey, Steve.
Hey there, Mike. Yeah, Verve Therapeutics, those shares are soaring after the gene editing startup agreed to be acquired by Eli Lilly in a deal worth up to $1.3 billion. Lilly's going to buy Verve for about $10.50 a share. That's an almost 70% premium from yesterday's close. Verve shares up about 80%. Eli Lilly down slightly. Over to Jabil now. Shares are higher after the electronics manufacturer lifted its full-year guidance and posted a Q3 beat on the top and bottom lines. The company said its intelligence infrastructure segment remains a critical growth engine amid accelerating AI-driven demand. Shares leading the S&P up about 8% and change. Mike, send it back over to you.
All right, Steve, thank you. We are just getting started. Up next, it's the latest threat to NVIDIA's AI market dominance. Christina Partsinevelos is live at the Amazon Web Services Lab in Austin, Texas, with a look at what's coming up. Hi, Christina.
Hi, Mike. AWS launching an update to one of its chips that could threaten the market share of traditional players. Like you said, I'm at Annapurna Labs in Austin, Texas. Coming up after the break, we look at how NVIDIA, or I should say Amazon, AWS, is building a chip army against NVIDIA. Those details next.
Nothing stands still. Not economics, not the market, and not Franklin Templeton. We've been navigating market ups and
estaban
downs
hablando de la
for
Reserva
over...
Federal, de que qué va a pasar mañana. Por lo general, una vez un colega de un fondo me dijo, nosotros nunca operamos cuando es la Reserva Federal, o sea, no hacemos nada. Y digo, una buena estrategia tal vez. A mí me gusta vigilar si hay alzas o bajas para o shortear o comprar al alza. Pero pues ya iremos viendo eso. Todavía no me contesta y es una 19. Ok.
The not wonderful things from a fundamental standpoint. So we might be truly in a different regime for a longer period of time than just the last 4.5 years that we've experienced. But it definitely is showing you what you need in your portfolio to support these types of events might not be what worked really well the last 40 years.
So I want to get your thoughts on a comment. Scott Bessent said that there is nothing systemic about what's going on in the bond market. And, quote, I think it's an uncomfortable but normal deleveraging that's going on. Thoughts on that now that it's still going on?
Yeah, I mean, I think the main problem is there's like two bond markets, right? It's the front end and everything else. And I think the front end is like truly 18 months in, like front end. And we have plenty of sources of means of stopping that the supply up on the extreme front end. But anything beyond that, there's kind of not a natural home. Your longer dated treasuries used to be sovereigns, and ultimately, I think a lot of our sovereign friends are potentially not looking to continue to load up on longer duration U.S. paper, and has been the case, for the last, frankly, kind of like almost 10 years, they've been lightening up on longer duration paper. You had, we'll call it, corporate pensions, a little bit of public pensions and insurance. They've already done their de-risking. That already kind of took place when we went from 0 to 5%. So they're already full. They're not necessarily in need of excess duration anymore. So it's like, where are we going to find that home for 5+ year paper? And over the last 3-4 years, it's actually been the wealth channel. It's been you and me saying, hey, we got really accustomed to close to zero rates. Now we're seeing things with a 4 handle that feels like a big improvement, a big difference. But I think we've kind of made it through a couple tax seasons, which everybody says, man, geez, like that 4% is really 2.5 after tax. Is that something I really want in my portfolio, especially if it's not acting like a ballast?
Well, it's amazing, too, when you mentioned that it feels so much better than when it was, high. We were up in 6. It's like, 4 feels great. Now, I'm just pulling up. Jamie Dimon said today that the bond market is going to crack, and you're going to panic when it does, because we've seen so many market vigilantes are out in force right now. Do you think it's going to crack?
So my gut would be that we haven't seen the highs or longer end interest rates. Again, it's much easier to control the front end. And I think tomorrow we're actually going to see some of that, not necessarily the FOMC trying to control interest rates, but I think their tune is going to change a little bit tomorrow. And I'm very intrigued what the longer end does. And what I mean by that is I actually think they're going to come out and be pretty dovish relative to expectations tomorrow. I wouldn't be surprised if we start seeing the front end pricing in additional cuts after the meeting tomorrow. I don't think they're going to do any action tomorrow, but I think it's going to be a very soft, dovish tone as they kind of pull back their impacts of potential inflation effects of the tariffs are a little bit less than they thought. They're seeing a little bit more of a slowdown in growth. They're seeing a little bit more of a slowdown in the consumer. And I think they're going to communicate, we're probably getting closer to resuming a rate cutting cycle. But I'm very, very intrigued. We'll call it a week from now. The gut reaction, you know exactly if that's the right indicator. But a week from now, if 10s are going to be higher or lower in terms of yields off of a dovish statement, I think it's going to tell you a lot about investors' appetite to hold longer duration assets in a potentially easing cycle.
Absolutely. And how many cuts are you thinking we'll see this year?
I think we're going to probably shake out to 3. But it's
3? That's the highest I've heard.
Yeah, but I think that's probably where we're going to end up. And I think the statement tomorrow is going to reflect something closer to those lines. I think ultimately they want to get back down to something what they proclaim neutral, and I think their new neutral is going to be right around that 3-ish% zone. So I would not be surprised if that's where they're going to try to guide us tomorrow to where they're going to be in December.
And we didn't see too much discussion about more dovish
Perdí el
viewpoints, more
Bitcoin. ¿Dónde
dovish
está el
language,
Bitcoin?
really until
Aquí
this
está.
morning when the weaker retail sales
105
came
y
out.
ahí
Do
va.
you think that will be a partial driver into that push away from that sort of general neutrality that we've seen?
I mean, I think their big problem is everybody has the inclination that inflation is going to increase in the upcoming months, but the data that we've
Ya no hay
received
café,
over the
gente.
last, kind of
Just
3 or
malo.
4-ish months has been going the correct direction in terms of reducing inflation and the ability to cut
Rosenbel,
rates
34
further.
minutos.
And if they're going
Volatilidad ya
to
fue.
remain in a data-dependent style stance and actually have people listen to their message going forward, they kind of have to start following the data at some
Y la
point in
volatilidad, aquí
time.
está.
They can't say, oh,
Ya, se acabó la
none of this
fiesta.
is meaningful until August and keep kicking
Y
the
para
can.
el
So
VT ya
I
desde antes se
would
acabó
not
la
be surprised
fiesta.
if tomorrow comes off as
Yang.
shockingly dovish and
Miren, se
changing the
mantiene.
direction a little bit.
Yang
Yeah,
es
and
el
it
corto.
makes perfect sense, although you have
Cuando nosotros hacemos un corto de la bolsa china, compramos Yang. Cuando sabemos que algo va a salir mal para China, pues Yang está ahí a la orden del día. Entonces compramos Yang y nos beneficiamos de la caída. Su homólogo e inverso es Yin. Nada mal. Pero bueno, y sube más fuerte que el positivo. En la mayoría de los casos pasa eso. Porque es más fácil a que pase algo malo y pase con fuerza, a que pase algo bueno y cuando pasa algo bueno pasa lento. Entonces, meh.
Their PC metrics shouldn't be overly affected by it. So you got these kind of cross streams of what they've told us for a bunch of years, the data within the inflation prints that they care about versus not. And housing has finally started to ease, which is an important one and what they actually care about. So I would not be surprised if they're almost going to set the table for, like we might get a little pickup by 1/10, 2/10 upcoming months, but that's back to the transitory style of inflation in those data points.
That one phrase that will never go away, transitory inflation. Now, I want to make sure we get to everything because we were talking off camera about the tariff tantrum and how we both love that phrase, and volatility, as it pertains to volatility and the V-shaped moves that we're seeing. Give us some observations about, general market moves and volatility.
Yeah, it's been pretty amazing over the last year plus, not only the move in equity prices down and immediately recovering, but also the quote-unquote second derivative, whether you're looking at credit, whether you're looking at implied volatility, or even the quote-unquote third derivative, volatility of volatility, those things are correcting even faster. So if you look back to the tariff tantrum of April, you had volatility collapse back to March levels, and options on the VIX go all the way back to those March levels when we were still 12% off, all-time highs. The second derivative risk, which historically takes a little bit longer to get stripped out of the machinery of the market, is reacting. So I find that incredibly interesting that essentially the market not only is saying that the risk that we just experienced is now no longer there, that we're completely removing the potential of that experience creating more risk into the near future. It just gets wiped out incredibly fast. So it's a very funky market over the last 12, 18 months, how quickly we get the risk on event and instantly risk off.
We've seen so many V-shaped moves. It's funny you're talking about vol of vol. We've got Kevin Green coming up with options after this, and I'm sure that we will talk about it. But Zed, I want to say thank you for joining us in studio today. Again, that's Zed Francis with Convexitas. And coming up, like I just mentioned, we will have Kevin Green for options and what we are watching, our levels coming into the close. We'll be back right after this.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Market on Close. It's time for Options Corner. Kevin Green is here, keeping an eye on the levels that we should be watching right now. Now, Kevin, what are you watching most closely today with the S&P 500?
Yeah, obviously we've seen a little bit of a fade because of the geopolitical tensions taking place in the market here. And we actually did see a pretty decent consolidation. If we look at the morning levels where we kind of highlighted some of the early areas of kind of focus here, we were unable to get to that 60-50-ish area to the upside here, but we did see obviously some consolidation happening at around this 59.85-ish area. We've been consolidating here for a fairly long time here, or actually for the last 2 hours or so. We had a brief breakout to the upside here, but we are trying to kind of get away from this negative gamma area or this significant portion of the options flow here today when it comes to volume. Top traded contract is sitting around that 59.80 put level at this point in time here. We haven't been able to see a really strong bounce off of that level, but that is something to kind of notice going into the close here. Also on this chart, that blue line is the 200-day or 200 period moving average on the 15-minute chart. Notice how that acted as an area of resistance pretty much all morning before we actually faded. That's actually significant from a technical standpoint. We do not want to get in the scenario we start making lower lows when you're looking at these daily intraday charts. Now we have made a consolidation or a range type of bound type of trade here with 59.80 at the lower end of that level. And to the upside, you're looking at around 60.50 here. You want to see a little bit of a break out to the upside and continue to move towards all-time highs rather than trading towards the lower end of that range and breaking lower. And unfortunately, we still have some economic data as well as some Fed meetings, the options expiration on Friday that could create a little bit more volatility.
Se escucha la lluvia bien bonito, pero a ver, dejen cierro la ventana porque capaz que se me está mojando el piso que es de madera.
Once again, that
Eso es malo para el
consolidation. If we're
negocio.
able to break above, break out, and break higher here, I'm looking at 6,000 as your area or your pin risk potential area here. A lot of reasons why you have that level as potential pen risk here. But if we are able to break out 6,000, I think would be a win for us, at least today. If we are able to break above that, 6,020 could be on the radar. Any type of further breakdown going into the close. Let's say that we have just complete risk off type of trading going into the close here. You're looking at 59.60 as your next level. So you don't like the price action, especially the fact that we kind of gyrated to the downside here, but you do like the fact going into the close that we have a consolidation and we are seeing a significant amount of volume at this level here. So you are getting some buyers trying to step in, but it's not able to really overcome some of that selling volume. So let's see what actually happens in that market on close order for today, which comes out around 10 minutes before the close here. Probably will make the big difference for at least a make or break when it comes to the price action for the S&P 500.
Well, I'll have you in the closing panel, so we can definitely touch on that there. But as you were talking, I was watching the charts. You know, we're now at 59.87, 56. So trying to make a move for that 59.90 level you were mentioning. Any other takeaways on the day?
Yeah, a couple of actually. If you look at the VIX spread between spot VIX and the VIX futures contract, and we're comparing really the July contract here, you are starting to get towards the backwardation where we have near-term volatility kind of inching higher than, let's say, 30 days out or even 60 days out. And that's really kind of complementing exactly what we are seeing right now with maybe heavy selling volume, maybe some risk off tone taking place in the market here. You'd like to see us kind of stay around these levels. You don't really want to see that backwardation getting too aggressive to the upside, especially for tomorrow as we do have that Fed meeting, Chairman Powell's commentary here. We have more uncertainty as far as the Fed rate policy, economic growth prospects here in the United States over the next couple of months, along with geopolitical risk. That's where you can see volatility really getting blown out. I also want to kind of highlight today too, I did have a couple of people reach out to me in DMs, and they're showing me these flows, these really bearish put flows that showed up in the market today. That's something that is more mechanical and related to the June options expiration. If you look at a lot of the options that were traded today on the equity level, you can talk about a core weave for that matter. That's more of a squeeze. But the United Healths of the world, the Teslas, Apples, things of that nature, a lot of the puts that were actually traded on today's session weren't necessarily bearish. They were really deep in the money. So that really kind of signifies that you have some rolling activity or some covering, and then potentially placing new trades in the next couple of days, rather than new buyers kind of getting into those really deep in the money puts. For instance, the $500 strike price puts for UNH were printing today, and those things are $200 in the money. Somebody usually probably would not buy that much premium in put options if they were really bearish on the next day or 2 days. So I'm really kind of looking at the fact that we are starting to see kind of that getting prepared for Friday, that rotation, getting out of the June contracts, getting into September's or whatever really kind of fits these portfolios that are placing these bigger trades. But a lot of the equity options
Tengo que
flow,
dar
I
mi
would say,
cuenta de
Marley,
banco.
might be a little bit more
Changos.
deceiving if you are not
No
kind of looking at
más.
the strikes, looking at the deltas that's being transacted, because some of them could be head fakes.
I'm looking at UNH right now. You're mentioning them. They're trading at 307.97. So that 500 put is well in the money there. What do you think in terms of the volatility that we're seeing? You know, you mentioned some of the major movers there. Do you think there is one primary driver right now for this week? Is it the Fed? Is it geopolitical? Or are they all equally weighted at this point?
I think they're all equally weighted. What I do find interesting is that we do have a lot of uncertainty when it comes to the geopolitical landscape right now, but the market's actually holding up. It's very orderly when it comes to these type of sell-offs. You're not getting this massive disconnect in the markets. Is liquidity coming in lower? It is, but you're not seeing these 5 or 8 point swings in a matter of 20 seconds, 30 seconds. That's usually your first sign that a major breakdown is taking place. Right now, you're just having these incremental, selling events kind of taking place over time if you're looking at it on an intraday basis. And that kind of also leads me to say, maybe we do get a selling event if we do get the announcement that we are going to join in on this fight formally. Maybe we do get a sell-off, but that probably would be a prime buying opportunity, because it doesn't seem like the market is really too concerned about a very long duration event, maybe a near-term event, but something that's longer term just doesn't seem like it's really priced in. Now, maybe the curve, when you're looking at the VIX and volatility skew just itself, maybe that will evolve over time to kind of reflect that, but I'm not seeing that at this point. So I think that's actually pretty decent for the bulls. Now, could that mean that we go back to the 20-day moving average, which is not that far away from here? It's only about 30 points away from here. That could be the case, not a big deal. Does that mean that we go back to the 200-day? Technically speaking, even if we went to the 200-day and held that actually is pretty healthy for a pullback standpoint here. So it seems like the market's kind of pricing in a lot of the risk that's perceived out there. And even if we do get a sell-off, I don't think it's going to be something that's going to be long-lived just because of this geopolitical risk event. It could be other events that kind of break us down even further, but this event alone doesn't seem like it's scaring a lot of people.
Well, Kevin, thank you so much. We're going to check back in with you again for our closing panel. But again, Kevin Green with Options Corner. Now, coming up, we'll look at the energy market as crude oil is recovering from its losses yesterday. We'll discuss how high oil could rise as tensions in the Middle East continue to heat up. Market on Close. We'll be right back.
¿Cómo atacan las centrales nucleares?
To 80 and we'll see where it gets
Mira nada
before.
más. El S&P 500 lo teníamos en 6.030 puntos. Ay, qué diferente se ve todo. Lo teníamos en 6.030 puntos. Ahorita, 5.989. Yo espero que en el peor de los escenarios caiga el S&P 500 a 5.070 y luego se mantenga en esos 5.070, 6.000 puntos. Además de eso, no le veo la gran cosa. Así que estará bien. Ok. Y a ver aquí. Es que luego uno se acostumbra a estas cosas. O sea, tienen la mica azul y la verdad es que sí hay un gran cambio. O sea, es como tener activado el Night Shift. Y no son naranjas como estos, porque también están estos para pantallas más brillosas, pero pero sí se ve muy... o tal vez debería de usar estos, no sé. Pero debería de subirles más el brillo. O sea, sí es para pantallas muy, muy brillosas. Y los cuales debería tener guardados aquí, por cierto. Entonces estos por ahora aquí. Listo. Suaves. Un cambio suave. The Bond Report. Acá. Todos los bonos están colapsando. ¿Qué pedo? No, 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 no. Ok. Tesla. Ahí va.
Move forward, we've seen fluctuation in the prices thus far, and today we're bouncing back again price-wise.
Yeah, I expect the impact of the conflict to be fairly muted. If you look at the big picture compared to any other Middle East conflict that we have had in history, this is the first time in history where we have a Middle East large-scale conflict, with the United States being a net exporter of oil and energy. And that fundamentally changes the dynamics compared to what we experienced in the 60s, 70s, 80s, 90s, compared to any previous geopolitical hotspot. That's why when you look at the move in equities, look at the move in vol, look at the move in oil and other commodities, the impact by historical standards is fairly muted, and we are not seeing that much of a disruption.
Yeah, I agree. Historically, the impact is generally muted, but oil jumping more than 4% just after President Trump made threats against Iran's leader on Truth Social. Do you think historical applies in this situation? Because we've seen a lot of movements that don't support historical backing.
I think history doesn't apply in the sense that it is going to be far muted when it comes to the oil markets. And one reason is that, especially in United States, the impacts of shale, if 5% on one hand, on the face of it looks very large, but I think that's more short-term market reaction. In the longer term, we don't expect really severe disruptions. Part of it is that if you look at the way shale operates, shale has a very short capital life cycle. If prices go up, more shale is going to hit the market. Very different dynamic than compared to what you had 20, 30 years ago, where you had these large oil projects that would take many years to come online if the prices would go up. Back in the day, it would take a few years for the oil supply level to respond to price signals. But currently, given where shale is, given how much we have in OPEC spare capacity, this direct disruption of oil from Iran wouldn't have impact. There are other ways where a conflict could impact the supply of oil. One of them is, other than the direct export of Iranian crude, the second method would be the amount of oil that goes through the Strait of Hormuz. The risk of disruption to the Strait of Hormuz could possibly push oil prices higher internationally. But again, any impact is going to be very short term and will be covered by other sources of crude. It's 20% of oil supply on one hand. On the other side, there is other spare capacity that is available. The other factor that is going to be impacting possible flow of energy is, to the extent that the Iranian and Islamic Republic Revolutionary Guard Corps starts attacking other countries' oil facilities, that could also move the oil prices. But given that Israeli defense forces have done a great job of degrading Islamic Republic's guard forces' offensive capabilities over the past 5 days, and within the first 24 hours, they took the entire upper echelon of IRGC's leadership. the ability of the Islamic Republic Guard Corps to disrupt international oil flows is fairly degraded, and we don't expect any major disruption in the flow of oil through either Strait of Hormuz or by attacking the neighboring countries' facilities.
And you mentioned the Strait of Hormuz, which is everybody has been mentioning as sort of a worst case scenario. Seems very unlikely. But JP Morgan came out and said they could see prices going as high as $130 a barrel. Deutsche Bank had their estimates as high as $120. If we did ever see that close, which again seems unlikely, but do you see the potential to go that high if we ended up actually seeing a blockage of passage there?
We do not see that as a long-term equilibrium price. Even if there is short-term spikes at those prices, within a few weeks, there is going to be enough supply of excess crude from other sources that can more than make up. And anyway, any disruption in the Strait of Hormuz is going to be very short-term. Given how much IRGC has been degraded and how fast the events in Iran are moving, there is really not much of a command and control remaining in IRGC to be able to execute that kind of complex military operation to shut down the Strait of Hormuz.
And in the short term, what sort of range do you anticipate seeing crude prices in? You know, we're kind of lingering around this between $70 and $74 mark. Do you expect to see us in that range, or will it start to skew to the lower or potentially to the higher?
If the conflict flares up, there is a possibility of oil moving higher, but again, hard to move above 100. And that's just, function of the fact that we have oversupplied domestically, so that's a helpful fact pattern. B, most of the Iranian crude itself directly goes to China, and China is the biggest consumer of crude oil. One would argue that maybe European markets are going to be more impacted by the U.S. compared to the U.S. markets by any disruption from the Middle East, and there is some truth to that. We are even seeing some, differentiation between European response, which President Macron is calling for ceasefire, versus President Trump is calling for unconditional surrender. That differentiation between the policy is partially driven by the different ways that oil prices could impact, these two economies. But coming back to your question, much of the Iranian neighbors, Saudi Arabia in particular, and other Persian Gulf countries, they are far less likely to go and support any kind of disruption in the market. If anything, their incentives, given the behavior that we have seen from Islamic Republic Guard Corps, they do not want the proxy wars of the Ayatollahs to continue and impact their countries. So they probably will be incentivized to support an orderly function of the oil markets.
Well, Ali Melli, thank you so much for joining us this afternoon. Again, Ali Melli from Montichill Capital Partners. Now, coming up, we will close out this market session. We'll get the big picture from the team at Charles Schwab. Market on Close. We'll be right back. Stay with us.
Ahí el Russell es el que está casi tocando el 1%. Nada grave aún así. Es un día cualquiera a la baja. Marsat. Listo. Tengo un tema con el SAT que tengo que resolver ya. Pero eso ya. O sea, no me mandan correos de que debo. Bueno, no como tal debo, pero que he percibido bastante dinero en un año. Entonces tengo que ver ese pedo. Ok. Venga, sí se puede. Ánimo. Vamos a checar. Lipstream, nada. Tesla 318 recuperándose. Volatilidad, obviamente, pues ya. Se acabó la fiesta, o sea, vean, ya fue. Cuando pasa algo malo, pues esto sube. Cuando deja de pasar algo malo, pues baja y comienzan a subir los índices, que son los buenos. Entonces así sucede esto. ¿Qué más tenemos? En 10 minutos cierra la bolsa, nada importante. Estoy acomodando unos números para pasar, tengo que pasar este mes recibos de pago, 3 recibos de pago para que paguen 3 meses. En algunos directos ya lo he dicho, los pagos son trimestrales. Yo gestiono las carteras, cada 3 meses hago un recibo de pago, se hacen cálculos de cómo empezamos, cómo vamos, rendimientos, comisiones, ventas, todo eso. Se hace un informe para el cliente y pues se le manda. Y ya se me paga y pues listo. Y ya después ya yo me arreglo con el SAT. Cosa que tengo pendiente también. Pero bueno, así es esto. Ok, ok. Omnilux. Nada importante. Ok, pues ha sido un día bastante apático. Miren, vamos a checar, vamos a hacer el análisis semanal antes de irnos. El AI Weekly. Vamos hasta acá abajo. Segunda semana de junio. Vamos a ver. Lunes. No, esperen, estamos en la tercera semana de junio. El análisis semanal, lunes, mercados. ¿Cómo se comportaron los mercados? Vamos a verlo. Vamos a comenzar con el Nasdaq nada más. Vamos a ponerlo en horas. Y ayer lunes. ¿Qué pasó ayer lunes? Eso es lo del día de hoy a la baja. Eso es lo del día de ayer. Lunes, mercados alcistas. A pesar. Mercados alcistas, más del 1.50% para los índices. Conflicto. Qué pésimo escribo. Conflicto entre Medio Oriente. Pone al petróleo, las energéticas, acciones nucleares y militares al alza. Reporte de ingresos Lenar. Vamos a ver Lenar, cómo le fue al reporte de ingresos. Vamos a checar acá. Ay, no, eso no lo pueden ver. Ja, confidencial, sorry. Vamos acá. Listo, ahora sí. Tiene que actualizar esto.
There's just a lot of uncertainty around there. So I think it's just natural that, given how well the market's been doing since April, that you might want to take some of the risk off of the table, some exposure off of the table, given some of that heightened uncertainty. And then if you look at the technicals, there's been some rollover modestly in the RSI, and that's a momentum indicator. And then around 6050 to 6100, that appears to be, roughly some kind of resistance. If you look back in January and February, we had a lot of churn around in this area there. So it looks like we have some near-term technical resistance there, a little bit of momentum waning, and then you have added uncertainty. And then, Marley, if you think about it, though, even with everything that's going on with the Middle East, we're only down 1% from last Thursday's close. And so that's not a lot of compensation for potential risk or even further escalation from here. So it makes sense to me that you're going to see markets down today, and I'd say they're holding up pretty well. And then the animal spirits, I feel like, are still in play. If you look at the likes of CoreWeave trading at a new all-time high, CrowdStrike trading at a new all-time high, Spotify trading at a new all-time high, etc. And we do have triple witching on expiration coming up this Friday. So I think that also is going to come into play in terms of having some volatility.
Oigan, estamos cerrando la bolsa con el índice de médico dicen 55. Eso es bastante grande. O sea, 5 puntos en una sesión es bastante. Entonces, estamos entrando en territorio neutral, así que lo más seguro es que sigamos corrigiéndonos. Ya quedó eso, bien. Acá ya no hay nada. Tampoco hay nada. Ok. Adiós, adiós. El tipo de cambio. A ver. De 19, 19.1. Ok. Cerramos esto. Y Lenar. Vamos a checar Lenar. Como ya nos vamos a ya dejarla así. Vamos a buscar Lenar. Las acciones de Lenar. Entonces, en días. El día de ayer estaban... No, mejor en horas ahora. Reporta en la apertura. Entonces aquí las queremos. De 112... De 112 tenemos un precio de 104. Dejen buscar en mi matriz de datos el precio intrínseco. Vamos a buscar Lenar. Lenar. Forecast. 110 en lo más bajo. O sea que teóricamente está barata. Con un valor intrínseco de 110. Oportunidad por unos cuantos dólares. Indicador cierre en 60 hoy martes. Mercados a la baja. Conflicto en Medio Oriente. Hace saltar la volatilidad. De nuevo, dejando un rendimiento del 7% en la sesión. Mercados a la baja, máximo tocaron menos 0.94% en el caso del Russell 1, 2, 3, 2000, listo. Entonces, lo que más me asusta es el indicador de miedo y codicia, 55, es demasiado, pero vamos a ver cómo se desarrolla en la semana. De todas maneras, lo que a mí me emociona, no me preocupa la caída porque lo que me emociona es la liquidez que hay disponible para shortear la bolsa como el día de hoy con la volatilidad y desde el viernes. Entonces, mientras más caiga la bolsa, va a ser más sencillo shortear la bolsa y generar más dinero. Obviamente ese es el objetivo, generar dinero. Modelo capitalista neoliberal y lo que quieran agregarle en conceptos negativos por parte de la izquierda, hablando en esos términos políticos, pero así funciona esto. Hay una responsabilidad fiduciaria con clientes, entonces a toda costa es proteger los activos y generar capital para seguir comprando más activos. Lunes, martes, listo, ahí va. Un buen lunes, un martes bien redactado, excepto por aquí. Y listo. Vamos a checar unas 58, 2 minutos para que cierre la bolsa. Seguramente ya no me van a contestar. A ver, vamos a checar. Sí las compraste, genial. Magnífico, bien. Listo. Pues listo, señores, ya cerró la bolsa. Vamos a ver acá la campana.
Despite all the geopolitical anxiety that we've seen in the last week, coupled with all this economic data that we've seen, even today you had a miss on retail sales, you had a miss on industrial production, you had a miss on the NHB housing survey, and you have this ongoing escalation in geopolitical tensions. Treasuries rallied a little bit, but the move is not as large as I think one would have assumed, and that just speaks to some of the upward forces placing pressure on yields, including fiscal imbalances, like I mentioned. Still a lot of anxiety around the inflationary implications of tariffs. So that to me is kind of the real big, notable factor of the last few days. As far as geopolitics, obviously oil is going to be the transmission mechanism. To the extent this becomes a broader macro problem, like you said, we haven't seen any real supply disruptions. An extremely fluid situation, but we've been dealing with geopolitical uncertainty, intense uncertainty now for years. Whether it's Ukraine, whether it's the other conflicts in the Middle East, even India and Pakistan more recently. And markets have absorbed all that relatively well. And I suspect it's going to be the case again with this latest conflict in Iran.
So we have a Fed decision tomorrow. We're going to get the outlook, the dot plot. You mentioned, and this is important to note, that we are going to also get weekly jobless claims tomorrow because Thursday is a market holiday. What's your level of concern, I guess, about some of the softer labor data?
Yeah, I mean, a lot of the May data has pointed to, again, a downtick in growth momentum. So the jobless claims have been deteriorating, especially the continuing jobless claims. That's definitely a red flag. We'll have to see if that goes up further tomorrow. Just circling back quickly to the monthly report for May, the headline number on the establishment survey was decent, but there was a lot of weakness beneath the surface, especially in the household survey. So it really does suggest that there is softness in the labor economy. I definitely think that the Fed has reason to kind of pivot its outlook very modestly in a dovish direction. Just given all the data that we've seen, I think the messaging for the most part tomorrow is going to be relatively status quo. They see risk to both sides of the mandate. And given that the economy they think is in a relatively decent position, they're going to kind of just sit on their hands and watch how everything unfolds. You do have the risks on the dots, the 2015 dot potentially going from 2 to 1.
Yeah, and so I guess we'll see if we do get that dovish pivot, whether the market has implicitly been expecting it here. Maybe one of the reasons we've been somewhat resilient despite all the pressures. Adam, thanks so much. Appreciate the time today. We're about 30 seconds until the close. Looks like the S&P 500 is going to go out with a decline of about 0.9%, 59.80 thereabouts. 59.70 was the low from last Friday when the markets first reacted to the Iran conflict. The volatility index 21.4. Brest decidedly negative, but still not a very messy sell-off just yet. That does it for closing bell. We'll send it into overtime with Morgan and John.
Well, that's the end of regulation. Equifax ringing the closing bell at the New York Stock Exchange. LGI Homes doing the honors of the NASDAQ. Stocks ending the day in the red as tension between Israel and Iran intensifies, but finishing off session lows. Healthcare and consumer discretionary were the worst performing S&P sectors. The 10-year yield falling 6 big.
Están hablando que cómo los niveles de consumo discrecional van a impactar en el S&P 500, porque los niveles de consumo están bajando. En el canal de Pip Trade, que yo recomiendo mucho, son datos que nadie menciona. O sea, todos abren su canal de YouTube y andan hablando, que conflicto Israel y que los índices y que mira las acciones y ya. Pero desmenuzar los datos financieros que están en Coifin o en Investing, nadie lo hace, más que un compi que se llama Juan, que es un tipazo para lo que hace. Y es un tipazo así en persona, es una gran persona. Y él desmenuza los datos. Hoy en la mañana lo estaba escuchando y los niveles de consumo están bajando. Tanto, o sea, véanlo de esta manera. Hace 3 meses, 6 meses, Walmart, Kroger, Target, todo el consumer retail disminuyó sus proyecciones de venta porque vieron que el consumo iba a bajar. Han pasado 6 meses y en efecto el consumo sigue bajando. Y yo creo que todavía no entramos en ese piso en el consumo, es decir, lo que caiga más. O sea, le falta todavía un buen fondo a eso. Y cuando eso pase, los índices se van a contraer a la baja. Entonces están pasando muchas cosas al mismo tiempo que funcionan como una bomba de tiempo. Entonces es cuestión de vigilar el mercado, observar y decir, ok, ya llegamos al fondo del consumo, nadie está ya literal consume lo mínimo, obviamente, nadie va a dejar de comprar papel de baño o croquetas para su gato, pero ahí están los datos. Entonces, pues así. Cuando eso pase, obviamente saben qué vamos a hacer, shortear la bolsa y listo, nos beneficiamos de eso también. Pero listo, a ver.
Is hiding. He's an easy target, but is safe there. We are not going to take him out, parentheses, kill, at least not for now. But we don't want missiles shot at civilians or American soldiers. Our patience is wearing thin, the president writes. So that leaves open the question of whether...
Ahora Estados Unidos se está metiendo con Irán. Pues bien, lo que sea, pero es momentáneo esto, o sea... Me siento mal por todo lo que está pasando. En el sentido, he visto los videos, ayer estaba viendo los videos de los bombardeos, son armas impresionantes, una tecnología de no mames, o sea, otro pedo. Pero, y eso ya, o sea, no hemos visto los misiles chinos, los misiles, la verdadera potencia militar rusa, no lo hemos visto con Ucrania. Estados Unidos también, las armas láser que tienen, o sea, están Están cabronas las armas. Pero ayer estaba viendo los misiles y pues está horrible, o sea, lo que está pasando. Están utilizando misiles balísticos, incluso supersónicos. O sea, ¿de dónde sacaron el capital para eso? Pero bueno, Irán, claro. Pero bueno. Los vamos a dejar aquí. Los voy a dejar aquí. Mañana ya será otro día. Estaremos analizando como siempre la bolsa. Uno ama lo que hace. Y pues ya, seguimos adelante, ¿va? Así que los dejo, amigos. Chao. Gracias por estar aquí. Gracias por meterse solo a verlo y ya salirse. Ja. Y para los que se quedan también, un gran saludo. Y cualquier mensaje, o sea, mándenlo. No les voy a cobrar por cualquier asesoría, o sea, de hecho, se los dije, o sea, estoy llamando a mis clientes, a mis prospectos para pues impartir esta educación, conocimiento que todos necesitamos a la larga, porque un buen retiro va a ser muy difícil si no invertimos o hacemos un negocio y pues muchos ya trabajan, tienen sus familias, entonces es complejo, no es fácil. Entonces ahí está el servicio, la propuesta privada de asesoramiento, inversión y crecimiento de su patrimonio. Poco a poco va. Entonces con eso me despido y pues ahora sí,